Well, holy flippity flip flop flap and smokes, everyone. Mortgage rates are skyrocketing. This is very bad news for home buyers and the housing market right now. Over the past few months, it's a sell-off in the stock market, but the housing market normally lags the stock market by 6 to 12 months. But with the Federal Reserve now lifting interest rates, with them saying they're going to start selling off some of their bonds and mortgage-backed securities, mortgage rates are rising, and this is what's happening in the housing market right now. We've got lots of news and data, so let's not waste any time. Let's get straight into it. Look at this, everyone. Mortgage rates are surging faster than expected, prompting economists to lower their home sales forecasts. Well, everyone, this is why you can't just listen to the mainstream media economist predictions, because guess what? They always have very conservative predictions because they're so afraid of being wrong. Listen to this. The average rate on the popular 30-year fixed rate mortgage hit 4.72% on Tuesday, moving 26 basis points higher since just Friday, according to Mortgage News Daily. That is absolutely crazy, everyone. We're starting to see mortgage rates get very close to 5%. And this is exactly what I've been warning people about is going to be coming. Because for us to get an idea of what may happen to the housing market in the future, we have to understand what has caused this recent global housing market boom, especially in the US, where house prices have increased 19% year over year, according to the Shiller Price Index. Well, what happened in 2020? You had the Federal Reserve drop interest rates to zero, and they started aggressively buying US Treasuries and mortgage-backed securities. What this caused was the 30-year fixed-rate mortgage to plummet and hit a low of around 2.7% in 2020. So it's been cheap credit and low supply that has caused this crazy housing boom. So that's what's made prices go up. Well, then interest rates going up and housing supply going up should do the opposite. Because let me show you an example of how much mortgage repayments are going to go up. And this is going to have a big effect on home buyers' purchasing power. Look at this. Say, for example, people in 2020 could get a mortgage of $400,000 and they're paying 2.7% interest. Let's have a look to see what their mortgage payment will be. It would be $1,622 per month. But let's say for the same mortgage, if interest rates hit 5% over a 30-year mortgage, what happens to your monthly repayment then? That's right, it increases by about $500, increasing to $2,147 per month. To put it simply, I don't think many home buyers are going to be able to afford a $500 increase in their mortgage repayments compared to what they would have paid in 2020. Not to mention this is for the same mortgage, but house prices are much more expensive now. So most estimates at the end of last year had the average 30-year mortgage rate hitting 4.5% by the end of 2022. But the war in Ukraine, rising oil prices, and inflation have all lit a fire underneath interest rates. That's exactly right, everyone. You see, the Federal Reserve is starting to say that they may possibly do 0.5 percentage point rate increases in May. And guess what? The Federal Reserve can't fix this global conflict with monetary policy. Can't fix the supply chain issues either. So really, the Federal Reserve is looking powerless to stop the crisis that we're already in. But some people are saying mortgage rates could go even higher than 5%. Rates have a small chance to top out before hitting 5% and a good chance of topping out before hitting 6%, said Matthew Graham, Chief Operating Officer at Mortgage News Daily. It is a rapidly moving target in this environment where we are legitimately and unexpectedly find ourselves needing to be concerned with inflation for the first time since the 1980s. That's exactly right, everyone. What has happened since the 80s when interest rates went from 19% and have been on nothing but a downtrend? See, they tried to lift interest rates every time in the mid-80s. Then again, they tried to lift them early 90s. Then again, mid-90s, 2000, 2008. Every time they try to lift interest rates, they go lower and lower. But that's because they've had the luxury of so-called low official CPI, when really we know the standard of living has been increasing over the past 40 years much higher than the CPI. So now with inflation being at a 40-year high, we could be about to face a long-term rate hike cycle. So home sales may also be adjusting their expectation. Asking prices slipped slightly last week, according to Realtor.com, despite the competitive market. And like I talk about, a lot of markets is psychology. When people see prices are rising rapidly, they want to get in, they want to FOMO in. And that's what's caused this crazy price appreciation in the housing market. But once the market starts to get a little sniff or a little hint the prices may start going down, then all this FOMO will be taken out of the market. And this is where we may see FOMO from sellers, where they may fear missing out selling their house at an all-time high. But let's have a look to see what the trend is for housing supply. Well, as we can see, in 2008, housing supply or housing inventory hit 12 months worth of inventory in 2009 at the peak. And when we saw the Federal Reserve lift interest rates over 2% in 2018, that's also when we saw housing supply peak in 2018 and house prices start to fall in places like New York and California, and housing supply went to about 7.3 months of supply. And so that brings us to today. We can see here supply started to go up in October 2021, but then it fell, which has caused this extra home price appreciation. But we're now starting to see an inflection point and housing supply is starting to increase again. So what this means is we've already seen the stock market react to high interest rates and risk of recession, but the housing market is very, very different. Unlike the stock market, we can sell at a click of a button. Your house, it can take months to sell, and it also takes us months to get that data. So in this video, I'm not predicting an imminent housing market collapse of 40% or more, but what I am thinking is over the next year, we are going to see a deceleration in home price appreciation. And I think later this year, we could start to see home prices finally start to fall once interest rates start to have a more of effect on the market. And we definitely need to see builders start building more homes and more supply hit the market. So everyone, that was just a quick update with what's happening with interest rates, with what's happening with mortgage rates. What do you think? How much of an effect will this have on the market? Let me know. Now, if you're interested and want to get up to 5 free stocks with Moomoo, they're doing a special promotion this month where you can deposit any amount and get up to 3 free stocks and a guaranteed free stock of NIO. I'll put a link in the description and a pinned comment. Now, for all my loyal viewers and subscribers still watching, you're awesome. Thanks for watching. I'll see you in the next video.